Wolf Leads. Hello everyone. Today Wolf Leads is happy to meet you again in content about a new book. This is a very famous book. This book is nearly 100 years after its first publication. It remains a highly recommended read among investors, with generations of readers finding that the book taught them more about markets and people than their own years of trading experience. This is a timeless story that will enrich your life and your portfolio. We are pleased to introduce to you the book named Jesse Livermore, The Great Investor. Jesse Livermore, the world's greatest bear, was the biggest name in finance and the most respected voice of his time. Livermore has a speculative career full of ups and downs, with brilliant successes as well as bitter failures. Jesse Livermore, The Great Investor was first published in 1923 and remains relevant today despite the market changes with the advent of many modern trading methods and the support of technology and analytical techniques. The book is the life and career of Jesse Livermore, fictionalized by Eden, with the details and voice are as realistic as recorded by Livermore himself. Many investors and speculators of different generations acknowledge the lessons they learned from the book, even more so than their market operations experience. Trading tips, as well as the sharp analysis of the price behavior of stocks and markets in this book, has timeless value and enormous influence throughout nearly 100 years from Jesse Livermore. The investor greatness is beyond doubt. This classic book paints the most complete portrait of Jesse Livermore, from a Boston sign boy to the greatest speculator, two of the most influential voices in the American stock market of his time. Before getting to the content of this book, Eli Chuang hopes that you will like and subscribe to support Eli Chuang's further development. Now, he would like to invite you to the content of Chapter 1. Prices are always changing. Jesse can remember in detail how prices moved the previous day, right before they went up or down. Stock prices can follow certain rules, and by observing stock prices hundreds of times, he was able to predict price movements. Soon he became famous as a speculation boy, and underground securities companies at that time banned their doors and did not do business with him. When he was 15 years old, he made his first profit of $1,000 and earned $10,000 in your 20s. According to exact calculations, Jesse was right 7 times out of 10. What defeated him was his lack of insight and discipline in sticking to his principles, that is, being willing to enter the market only when he was satisfied. Satisfaction with conditions shows favorability with your decision. At the age of 21, Jesse went to New York, brought his entire fortune, and lost it all because of trading on the major stock exchanges. He was not used to the fact that his order matching price always came later and the price slipped from the price he wanted to place, always larger when buying and always smaller when selling. The bulletin board quotes prices slower than market developments. It was no longer like trading on the underground stock exchanges he had participated in before. The price always matched the price he wanted to set. He went bankrupt for the first time. He returned to his hometown and started trading again with underground securities company offices, but those things would not help him amass a large fortune, and the desire for success prompted him to return to New York. 2. Lessons on buying stocks and holding tight in a bull market. Lessons learned from taking profits and buying when prices adjust. Everyone does that, and that's exactly what Jesse did, or at least tried to do. Thanks to that, he took profits and waited for a correction that never happened. He saw his stock increase another 10 points and he remained motionless with a solid profit of 4 points in his pocket. It is said that profit taking is never wrong. No, you're not wrong. But you never get rich with 4 points of profit in a bull market. He could have made $20,000, but he only made $2,000. That is the result of conservatism. A valuable lesson and lifelong experience of a seasoned trader is to maintain your position in a bull market. Losing position is something no one can accept. No one can grasp all the ups and downs of the market. While the market is bullish, your job is to buy and then hold until you believe the bull market is nearing its end. To do this, you need to research general market conditions instead of listening to insider sources or specific factors affecting individual stocks. Then sell all your shares to everyone who wants to hold them. Wait until you notice or until you think you see the market reversing. That means a reversal of general conditions begins to appear. To do this, you need to use your brain and vision. Ignore other people's advice, and it will also help you avoid impatience. Put faith in your own judgments. If you don't have faith in yourself, it will be difficult for you to go far in this field. Study the general conditions, choose a position and stick to it. Every time you find out the cause of a loss or find the cause of a mistake, Add to your list the word don't repeat. The principle when buying stocks is that buying when the market increases is the simplest method of buying stocks. Each new purchase price must be higher than the old purchase. 3. Success only truly comes when you buy stocks with your own analysis, not someone else's. You need to draw your own meaning from the things you observe. Other people's tips, opinions, estimates, and suspicions, no matter how friendly or capable they are, will not help you, and never argue with the price list. Jesse saw the cumulative buying action of Union Pacific stock, and he started buying 500 shares at a time. Ed Harding advised Jesse to sell all of those shares before it was too late. In the end, he followed his friend's advice and sold all of those shares and shorted another 4,000 shares at a price of $162. Then the stock price jumped sharply when the board of directors announced a 10% dividend rate. At the end of the transaction, he lost $40,000. Realize your own mistakes. He bought back the 4,000 shares he sold short and bought another 4,000 shares. Not only did he earn enough to make up for the $40,000 he lost, but he also earned an additional $15,000. He has learned the lesson not to listen to inside information or tips, but to only follow his own beliefs. To be able to determine the action of the general market requires focusing and studying the underlying conditions. Valuable lesson about choosing the time to act. If you choose the right trading time, your profitable position will not be seriously threatened, and you can sit still with peace of mind. Please wait cautiously. Jesse sold too early when he saw fundamental market conditions that signaled an impending crisis. And then the market's recovery efforts wiped out his account. 4. Completed the trading strategy, and the deal brought in over $1 million. Marking his successful turning point, Jesse realized what he needed to do. No more confusion. No more half right, half wrong methods. The skill of reading price lists has become an important part, as has the ability to hold a position. He discovered the need to know how to analyze general conditions, arrange them to be able to calculate possibilities in advance. As soon as all the basic conditions were in place for a crisis to occur, Jesse acted quickly. He began and continued to short stocks. Many people believe that he was the one who started the declines in many stocks, but he actually did the right thing. His greatest victory was not in the money he earned, but in the intangible values. He was right. He looked to the future and followed a carefully prepared plan. Jesse Livermore's most glorious day, October 24, 1907. The money in the market had dried up. Borrowers are willing to pay whatever interest rate the lender requires. There isn't enough money for everyone. The president of the New York Stock Exchange, Mr. R. H. Thomas, after realizing that all the brokerage offices on Wall Street were about to face a disaster, sought help from the owners of National City Bank and J.P. Morgan & Co. That day, Jesse's profits exceeded $1 million. Jesse became king for a day. The market has no more money and no more buying power at any price. Just a small selling force is enough to push the market into deeper crisis and force the government to think about closing the exchange. The market cannot take any more pressure. The bankers called in Jesse's broker and sent the message, "I have invited you here because I want you to go see your friend Livingston immediately and tell him that we hope he will don't sell any more shares today." The market cannot take any more pressure. In the current situation, preventing a serious crisis is already an extremely difficult task. Let's appeal to his patriotism. This is a case where one person needs to act for the benefit of all. "Tell me immediately what he says," Jesse replied. "Go back and tell Mr. Blank that I agree with them and that I was fully aware of the severity of the situation, even before he called you. I'm not selling any more shares today. Instead, I'm going back in and buying as much as I can." And he kept his word. That day he opened a position to buy 100,000 shares, and he didn't short any more shares for the next 9 months. That is also the bottom of the market, ABC.